Which stocks are likely to do better in a recession? Is the inflation bubble popping finally? Can stocks with good metrics continue to rocket higher? Or are we doomed to keep riding this roller coaster market into a never-ending downturn? Hang on. This is not financial nor professional advice. This video is for entertainment only. Hey everyone. As you are aware, we live in very unusual financial times. The Federal Reserve has never flooded the economy with this much money, trillions upon trillions of dollars. They have like 8 or 9 trillion of bonds that they bought to stimulate the economy. When they buy bonds, they are putting money into the economy. They hold the bonds and put money into the economy. And now they want to do the reverse. They want to sell the bonds, which takes money out of the economy and should have a deflationary effect. And also at the same time, they're raising interest rates higher and higher. They've raised it from near zero to 4% and are probably going to raise it another half point on December 14th. There's a 75% chance, 75 to 80% chance that they'll do a 0.5% increase on December 14th. And we have to watch the Fed because it's all about the Fed. They created this economy in many ways when the economy was faltering to keep it from going into a serious depression. And they created just the opposite. They created a boom in the stock market because money was more or less free. They more or less guaranteed that the stock market wasn't going to go down like they had never done before. And they probably overdid it, and now they're trying to undo that. And as they undo it, the trick is going to be undoing it without something breaking, without the economy crashing and going into a depression, which can happen if they overdo it. They probably won't do that, hopefully. And as they get nearer to what they want to find, just the ideal interest rate, not too high that it breaks the economy totally, but not too low that inflation keeps raging. And to find that just right mix is going to be the difficulty. But I do have reason to believe that we have some good news coming in the form of lower inflation numbers. The first number we want to pay attention to is the PCE, which comes out on December 1st, because the Federal Reserve looks at the personal consumption expenditures, the PCE, very closely. And I think that's going to come in lower, mainly because oil has fallen to like $77 and looks like it might go lower. So it should be better for November. And we get the official CPI, Consumption Price Index, on December 13th, one day before the Fed raises rates. Now, they're going to raise rates, but hopefully if we get a decent number, they won't raise it beyond 0.5%. But we want to look at those dates, the PCE on December 1st, and the PCI on December 14th. And if those two inflation numbers, each one of those inflation numbers are good, you can continue to trade stocks and look forward to better days. I like technology stocks, and technology stocks have come down a lot, some of them like 70 to 80%. Google has done pretty well, actually, in spite of the crash. They've come down 35%, and it might be time to start buying it. Its price is around $97. Its value is around $109. So it's undervalued. It's worth more than the price reflects. And its price to earnings is about 18, which is remarkably low for a tech stock. Its earnings growth rate is good at 18%. And Google is just number one in so many ways. They're number one as far as internet search goes. They have the number one internet browser, the number one video streaming with YouTube. They're number one in navigation. If you need to go somewhere, you're probably using Google Maps, and they have a view of the whole world by satellite. You can see your house from a satellite. They have in my opinion, and in fact, they have the number one email. I think it's just much more convenient and it's easier to transfer data than with other emails that I've used. So there's all sorts of good reasons to buy Google when it's I don't know if it's at its lowest point, but it's lower than it has been in a long time. And I think it'll reflect a good buy in the future. It's a long-term hold, I think. And looking at the chart, if the inflation news is good, I think we hit a bottom on November 3rd at about $83. And since then, it's come up to 97. So you're looking at the year-to-date chart, but I think we're springboarding off the bottom. That is, if inflation continues to go down. So I think this is possibly a good news stock, and it's surely a good long-term hold, especially if you dollar cost average into it. A stock I like even better than Google. Google's also called Alphabet. The GOOGL is also called Alphabet. But a stock I like even better than Google is Taiwan Semiconductor, whose symbol is TSM. Its price right now is about $81. It's worth more than $100. Its price to earnings is only about 14, and its earnings growth rate is 24%. So we have a real solid stock here. They're located, of course, in Taiwan, and they're making most of the semiconductors in the world. It's the 12th largest corporation in the world and has over $420 billion market capitalization. So this is a major company. It's got a good earnings growth rate and a very low price to earnings, especially for a technology stock. And looking at the chart, you can see that it's had a tough year, like all technology stocks. On October 24th, it hit like $62, and now it's at 81. So I always look for that. I want to see poppage off the bottom or close to the bottom. So I think we're on the right track with this one. I know Taiwan Semiconductor is building factories near Phoenix, where I live, and I think it's an outstanding company as the United States wants to bring semiconductor production closer to home for obvious reasons. And I think we are near the bottom if we haven't been at the absolute bottom. I think this is a solid stock and one I intend to follow. I haven't bought it as of yet, but it's looking awfully tempting, especially when I look at it and compared to Google, that I love Google. Why am I not buying TSM? I think I should buy some tomorrow. It's what I think. Warren Buffett owns shares of Taiwan Semiconductor. So you're investing with the greatest investor in the world. And so we might follow that lead and look at Kroger, which is a grocery store And to say it's a grocery store is really a misnomer. Kroger owns, I think, at least 15, probably 20 different grocery chain stores. I know in Arizona, the main grocery store is Fry's, which they own. They also bought Smith's, which was in Arizona. They also own Ralph's, which is in California, and on and on. They own at least 15. It must be close to 20 grocery stores. And as you've noticed, the prices in grocery stores these days, I think they're probably making money. Kroger's stock symbol is KR, and it's really a good value. It sells for about $49. Its value is about $56. Its price to earnings is only about 12, but its earnings growth rate is a very good 20%. They even pay a dividend of like 2.12%. So this is a good value stock with good earnings, and in an inflationary environment where they have pricing power because we have to buy groceries, right? So we're going to buy groceries, and you're probably near a Kroger store near you. And looking at the chart, like most stocks, Kroger has had a tough year-to-date statistics, but they hit a low point of $42 on October 17th, and now it's $49. So I think we're seeing that poppage off the bottom, and I think it's a buy with a solid price to earnings of only 12, and it's a good earnings growth rate of 20%. If you are busy working or going to school or have family and don't have the time to follow stocks closely, you may be ahead to invest in the indexes directly. And right now, probably the Dow Jones Industrial tends to do better in recessions, and we always want to guard against the downside. And so if you trade DJD, that tracks the Dow Jones Industrial Average, which tends to do better in recessions. Of course, the S&P 500 is always a good index generally to invest in. A lot of people like the dollar cost average into that. And it's likely that even if this isn't the bottom, so to speak, we are probably much closer to the bottom. And if you're investing with a time horizon of some years, especially if you're young, if you're in your 20s or 30s, dollar cost averaging into the major indexes is really a smart strategy. Because you're going to catch it at the low points, and the market does go up almost invariably. It may stumble, but it eventually will right itself, and then you'll look like a genius for having dollar cost averaged into it. But using DJD on the Dow Jones Industrial Average and using the SPY to get the S&P 500 are good strategies. I tend to like to use the triple leveraged versions of the Dow Jones Industrial Average, which is the UDOW, UDOW, which triple leverages the Dow Jones Industrial Average. And I like to triple leverage the S&P 500, and you do that with SPXL. And looking at the chart, I wanted to show you the difference between the triple leverage and the regular index. That DJD is in green, and that's made 9%. And it's really a very conservative version of the Dow Jones Industrial Average, as they weight it according to which stocks on the Dow Jones Industrial Average pays the most dividend, the highest dividends. So it's weighted towards high dividend stocks on the Dow Jones Industrial Average. So it's very conservative. And in the last month, they've made about 9%. Meanwhile, the triple leverage Dow Jones Industrial Average, the UDOW, has made about 22%. And of course, I wanted to put in what can happen with triple leverage if things don't go the way you think they'll go. If you shorted the Dow, if you use the inverse fund SDOW, which is in red, you would lose 22% in the last month. So I like to use the UDOW, which is in blue. That's made 22% in the last month. I think it's a reasonable risk. A very conservative way to go is to play the highest dividend paying stocks on the Dow Jones Industrial, which is in green, which is the DJD stock. Of course, I always am trading some type of leveraged fund or another. I just like it because you have diversification and they move like individual stocks. The ETFs that aren't leveraged, they don't move fast enough for me, I guess. At least we're not in the type of market where it's either raging upwards or raging downwards at breakneck speeds like it has in the past. So I like to do leveraged funds. My favorites right now are CURE, that's CURE, which is a triple leverage bullish fund on the healthcare sector. And I also like DFEN, that's DFEN, which is a triple leverage bullish fund on the weapons of war stocks that make stingers and javelins. And I suppose drones must be in there somewhere too, but it's the type of companies like Raytheon and McDonnell Douglas, companies like that are involved in defense. And there's some aerospace in there too, especially with defense. And also I like to trade FAS, FAS at times. I see FAS as more of a swing trade. It's a triple leverage bullish fund on financial services, which is mostly banks. And banks and other financial services tend to make more money when interest rates are going up. And so I see that as a swing trade. As long as interest rates are going up, it seems like it's pretty certain to make money, at least in my mind. Now, these are volatile, and this is not financial advice. Because it can work against you too. That if these areas of the market go down, you lose triple the amount you would lose if you had just an unleveraged fund in that area. And looking at the chart, you can see that FAS, which is in red, made 25%. DFEN, which is in blue, made 22%. And CURE came in at 12%, and CURE is in green. So these three triple leverage bullish funds have that poppage that I'm looking for. And I think I'm going to stick with them unless inflation comes in really bad. I also trade the indexes using SPXL, which is a triple leverage bullish fund on the S&P 500. And I also use the triple leverage bullish fund on the Dow Jones Industrials, and that's UDOW, UDOW, a triple leverage bullish fund on the Dow Jones Industrials. And looking at the chart, you can see that UDOW went up about 23% in a month, and SPXL went up about 14% in the last month. So we have poppage everywhere. Everything's popping, and hopefully it'll keep popping if the numbers come in good on inflation. Be sure to smash the like button. It really does make a difference to the channel. I think we have better times ahead. I'm so glad that we could possibly be pulling out of this bear market. We need a little bit more confirmation. I think I've seen enough poppage to give me a strong belief, or I'm getting close to a strong belief that we're going to have an up market, just because I am seeing that poppage everywhere, and that's the first sign that you're pulling out of a hole. And I think we're going to get out of this hole, and I think we're going to bulldoze our way out of it. It's just we have to get this inflation under control. And thanks, everybody. Good luck to us all. We're going to need it, but I think better times are ahead.